And I'll be recording this meeting for those of us who would want to rewatch this, because this is a technical analysis. Most of the times you don't get it immediately. You have to rewatch it to be able to get it. This is something that you gain by experience. So I'll make the recording and then I will make it available after the class too. On that note, I'll be bringing Mr. Solomon on board to take us through this class. I'm sure we already got the two major parts we'll be handling today. Thank you very much. My name is Victoria Waka. I am the founder of Valucop Global, your host this evening. So, Mr. Solomon, please can you introduce yourself so we can start the class?
Okay. Good evening, everybody. Can you hear me? Good evening. If you can hear me, just indicate in the chat box. Just type one. Okay. Please, can you mute your audio, please? Because we're about to get into the class. Okay, thank you. So, okay, let me share my screen first. Hold on. Okay. Can you also see my children? If you can see what I'm doing right now, just indicate, please. All right, so without wasting much time, I'll be starting with the chart patterns. So I know that by now you guys should have known about chart pattern, like normal double top and normal double bottom. Can you all hear me, please? Yeah, so right now we'll be going into the fundamentals. Instead of going directly to the chart pattern, I'm going to be telling you some things you need to know about the chart pattern. So there are two major types of chart pattern, which I'll be talking about this evening. Hold on. Okay. We have chart pattern based on direction and type. Please, I need you guys to get pen and paper, just something, because this is very important right now. So there's chart pattern based on direction and type. So when we're talking about direction is where price will go after the chart pattern. And there are only two directions that price can go in the market. It's either up or down. So we classify these as
Okay, it seems like our teacher is frozen. It just give him a bit of a time to join back.
Hello, can you hear me?
We stopped hearing you at some point, and the volume of your voice. We need to increase the volume of your voice, so that we can hear you better.
Can you all hear me now?
Yes,
okay,
I can hear you from here.
All right. So I'm saying people are familiar with just the double top and bottom, the head and shoulder, but at the point you feel like, oh, I used this correctly. What happened? You know, you feel like, oh, did I do something wrong? Because you were not paying much attention to this because markets will always make reversal or continuation pattern at a point. So when we're talking about the chart pattern, you want to know the direction, number one, and the type. That is one thing you should consider while using the chart pattern. Are you guys getting what I'm trying to say right now? So, like I said, the direction is where price will go after the chart pattern. And like I said earlier, there are only two places price can go. It either goes up or down. So when price goes up, we call it like bullish. When it comes down, we call it bearish. I'm very sure you guys should be familiar with this already. So when chart pattern implies the price will go up or come down, like I said earlier, then secondly, you want to note the type. Because like we said, price goes up or down, but you want to know the type of the chart pattern that is being formed, because that is how you know where price is really going. Either it is going up or down. So, and type is what will happen after price pattern in relation to what happened in the previous pattern. That is type for you. So at every point in the market, there's either reversal, continuation, or neutral pattern. Those are the three types of chart pattern we have. We have the reversal, the continuation, and the neutral. We're talking about the reversal. I think I should put this on the screen. Hold on. Let me put this on the screen. Okay. We have the reversal pattern. Hold on.
What do you guys?
Okay. Can you see this? We have the reversal pattern. Oh, sorry, let me correct this.
Please share your screen.
Yeah. Can you see my screen?
No, we're not seeing it yet.
Okay, hold on. Hold on. Okay. Okay. Hold on. I'm still getting used to this one. Okay. Just hold on. I'm trying to. Please, can I join the meeting? I can't find the functions here. But let me join the meeting. I'll be back now, please.
All right. Okay, let us give me 1 minute. He'll just join back almost immediately.
Yes. Okay. Can you guys see me now? Can you see me? Can you hear me?
Yes, we can see your screen now.
Okay. We have the reversal pattern, like I said. Reversal pattern. Number two, we have the continuation. Then we have the neutral. So these are the three patterns we have in the stock market. So whenever you see a reversal pattern, that means when price is going up, there's about to be a pullback. So when you see a reversal pattern, there's about to be a pullback in the market. From the uptrend, maybe a downtrend is about to start. Then when you see, can you hear me? When you see a continuation pattern, that means price is still going in the same direction. Please, can you mute your audios, please? Yeah.
No, I've muted the person. Just continue.
Okay. So when you see a continuation pattern, that means price is still going in the same direction. So no matter what you think, no matter what you see in the market, you have to pay attention to know what's really going on there, because most of the time this pattern looks alike. So it takes constant practice for you to be able to note this pattern. And there's a way I note them. There's a secret way I note them by using the line charts. The line charts we figure out, we filter out all the noise in the market, and we show you what is really going on. So aside from the normal chart you guys are used to, you have to learn how to get acquainted with the line charts, because the line chart will filter all the noise. And for my candlestick, before I go deep into this, for my candlestick, I don't use the normal Japanese candlestick. I use Ekenachi, because Ekenachi too will show you what's really going on in the market. It's more explainable than the normal Japanese pattern, the Japanese candlestick. So let's continue. So when I'm talking about the reversal pattern, I said reversal pattern happens when price is going up and suddenly it goes down. Then continuation pattern. Continuation pattern means price will need to go in the same direction. Maybe at a point there's an uptrend, maybe price decides to be like, okay, form a pattern, you think it's going to reverse and it keeps going up, be like, what is going on? That means you have to pay attention to the exact pattern that happened in that particular point. That's what observation is, what the forex is all about, what the trade is all about. You have to be able to observe to know what is going on, because we don't control this market. What you want to do is try to follow the trend, what is happening in the market. In order for you to get this, you have to know, because chart pattern is very, very important. Very, very important in the forex market. And this is even applicable to crypto too. This is applicable to crypto. So like I said, the neutral pattern. Now there's a little difference about the neutral to the reversal and continuation. The neutral means price can either go up or come down. But basically, I'll be talking about the reversal pattern and the continuation this time, because aside from teaching this thing, it takes constant practice, like I said. So I'll be talking majorly on the reversal pattern and the continuation pattern. So number one reversal pattern I'd like to talk about is the normal head and shoulder pattern. Yeah, normal head and shoulder pattern. And this is what head and shoulder pattern looks like. Let me show you on my screen. We have head and shoulder. This is the first shoulder. Come like this. This is the head, like this. Okay. Then we have this. Then something like this. Then you have a retest at this point. Sorry, I think this is not accurate. Okay, sorry. Hold on. All right. Then at the break of this neckline, then you have a retest. Yeah. And this is where your entry is at the shoulder. So this is a good example of the head and shoulder pattern. This is the first, this is the head. Yeah, you can name this the head. This is the head. This is the left shoulder. Let me just say L shoulder, LS, and okay, and this is the right shoulder. Right shoulder. Now, okay. So when you see a pattern like this, one thing I will assure you is that you will not see this pattern like this on the charts, because they will always at a point or two try to convince you on what to do. At times it's very hard to point out this thing, but that is why I said constant practice. You have to get acquainted with all this. Like when you get close to your chart, you can tell when some things are going on. So this is the left shoulder, this is the right shoulder, this is the head. So, and this is the neckline. We call this the neckline. So the neckline. So for you to know you have a valid head and shoulder pattern, definitely you see something like this. But in order for you to trade it, most of the time you might see a move coming like this, and all of a sudden start going back up. For you to trade this particular pattern, you want to wait for price to come back and retest the neckline over here. you want to wait for price to come back to retrieve the neckline, then that's when you take your shots. Maybe you can take like 1 to 3 reward ratio from here, and maybe you get whatever trade. I can guarantee you that trade will go. Then we're talking about the same head and shoulder pattern for the bullish. This is for the bearish. This is for the bearish. Let's do this. Okay, you want to see something like this? The first neck, like this. You want to see something like this. Then back here, like this. Then like this. So a break of the neckline, then something like this. So this is the head and shoulder. This is the head and shoulder for the bearish. This is your neckline. This is your right shoulder. This is your left shoulder, and this is the head. So you don't take trade until you wait for a retest on this zone. Because if you should take a trade from here, there's a probability there might be like a reversal. So for you to be able to know that, oh, this is a valid head and shoulder pattern for the bearish, you want to wait for this thing. Your stop loss now will be here. You can put your stop loss here. Excel. You can put your Excel here. Then you can target like 1 to 3 reward ratio from here. That is what the head and shoulder pattern is all about. And this can be either for bullish and bearish. Like I said, the first one in this shape, this first one, this is for the bullish, the bearish rather. You have something like this, like this. Then you want to wait for a break of the neckline, then a retest, then zoom. You want to go. So this is the neckline. This is your head, left shoulder, right shoulder, the neckline, and the retest here and the neckline before you take your shots. So this is how to trade the head and shoulder pattern. I will still go into charts to show you one or two of these charts. Then secondly, we're going to be talking about other reversal patterns because there are a lot of reversal patterns we need to get used to. Unlike everybody trade the head and the shoulder pattern, but that is not all. The forex market is full of surprises. Like you can't really know what is going to happen. So what you want to do is follow trend. You are not trying to predict what is going to happen because our money cannot move the markets. Yeah. So what you want to do is just follow the structure and trade accordingly. That is how you get profits on this. And I must advise, like whenever you're testing these strategies, do not risk more than what you can afford. Just try it out. So when it's worth, like you can increase your lot size and try to get bigger gain. Yeah. So the next reversal pattern I'll be talking about is a double top and double bottom. Like I mentioned at that time, the double top and double bottom happens almost every time in the markets. You can see it often, like just the double top. Hello, can you hear me?
Just increase the volume of your voice a little.
Okay, can you hear me? Can you hear me?
Yes, okay. I can hear you, but just increase.
Okay, come closer to your phone or whatever device you are using.
Okay, can you hear me now? Is it better?
Yes,
okay.
I can hear you very clearly.
Okay.
You, please.
Can you hear me now?
Please go ahead.
But me, I can hear you very clearly from my side. It's very clear from my side.
Okay. Then I'll be talking about the double top and double bottom. Let me erase this. Okay. The double top and the double bottom. So when you're talking about the double top, you see something like this, an M shape, and something like this. Then you wait for this, retest, and zoom. So this is what a bearish double top looks like. This is a double top. It looks like M. You can see it when it's from that. Oh, this looks like a M. What's it called? So you don't want to trade the double top until you wait for a retest here because that's the safest way to trade it. You can decide to trade from here. You can decide to trade from here, and you see market reversing. So if you are putting your stop loss here or here, you end up losing your money. So if you want to trade the double top, you want to wait for the retest on the neckline. Then when you start seeing rejection candle, that is when you put in for a trade. I can target to 1 or 2, 1 to 2 or 1 to 3 reward ratio from here. I can guarantee you that it is a go. And one more thing I need to talk about on double top. You know, for you to know a valid double top, it is possible for you to see an M shape in the market, and you're taking your short. Maybe there's a retest, and all of a sudden you see something like this. Yeah, it happens because, like I said, the forex market is very full of surprises. So the safest way to trade this, there are rules applied to. Okay, let me see that I can show you an example. Hold on. Okay, let's do this. Okay, now this is what I'm talking about. Let me delete this. This is what I'm talking about. Hold on. Okay, now, like I said, a lot of people may not know how a double top or a double bottom forms. When you see something like this, like, oh, this is a W shape, you want to trade it. You can see what happened. This is a double bottom actually, forming like a double bottom, and it start reversing. So before you put in for a trade, you have to apply your other analysis to it. You know, check how valid the trade before you put in for it. You don't just jump into trade like, oh, this is forming a double pattern. No, you need to be very observant. That is why what the forex market is all about. Now, this is an example of a double bottom here, right? Yeah, from here. Okay, start from here, then here. Okay, before I move into double bottom, let me show you what double bottom looks like. This is like this. You see something like this, then it goes up, come back to the neckline to the test, then zoom. Let's keep going up. Yeah, don't mind this. So this is an example of a double bottom. Yes. Now this is a W shape. Now before you trade a double bottom, you want to know how valid it is. Now you don't want to wait for the whole W shape to form before you start your analysis. You want to start before the whole thing happens. Now, whenever you see a potential W from here to here, you want to wait. You want to pick out the air. You want to create a zone. And how do you create a zone? Let me zoom this. Okay. Now, you want to come to the extreme end of the candlestick here. The first closing for this correction move over here, this impulse move. You want to bring your line to this place to cover this zone. Then you want to come to the highest point of the week over here. You want to capture it. Now, that's the number one rule base for double bottom. Then you wait. Now, you can see the neckline here. Neckline is here. Then you see something like this. Now, the data on a higher time frame is more correct than the lesser time frame. Let's take this to 1 hour. We'll see what I'm talking about. Okay, now you can see this W is not as complicated as the one we saw on the 30-minute chart. Can you hear me? So this is a potential, this is a double bottom. Now you want to pick the extreme end of the candle, then the wicks. Don't forget, wick are extension of price, so you don't want to neglect them. When you feel like, oh, this is just a wick, you don't want to mind them. It can actually pay a lot of benefits to your trade. Now you wait for the test of, you want to wait for the neckline to form. Then the next move, as you can see, this is an impulse move to the up, but look at this. This fractal candle came back to retest this neck somehow. It was not obvious. Even the same with this candle right here. It came down to retest the neck. How sure are you? Now look at this. You want to check here and here. It is not that obvious, but you can see, like I said, this pattern won't look like amazing like the way we drew the other time. So now this is the neckline. The price went up, but came back on this fractal candle to test this neckline. You can see this is extension of price. Now let's check the lesser time zone. You see what I'm talking about. Now you can see it will be more clear in the lesser time zone. Sorry, my chart is messy. Okay, now as you can see, this is it. The fractal candle you're seeing on the 1 hour chart, it came back to the test here before price started going up. Even here, what do you see next? Price went up all the way up. So if you put in for a trade from here, you get a lot of, let's calculate the pips. Let's say from here to here, that's about 62 pips. Just for this particular trade, just using the double bottom. That is all you need. That is all you're using for this trade. So this sharp pattern can be very, very exceptional in the market, but you don't want to depend on it alone. You want to have other facts in place before you drop it to, believing, oh, this pattern is awesome and stuff like that. Because if you are not careful enough, you might get distracted and maybe do something and lose a lot of money. That is why if you are practicing this, particular strategy, do not put more than what you can use. So then the next reversal pattern I'm going to be talking about is we have the falling wedge. Now, okay, no, let us talk about the falling wedge. Let's talk about the triple top and the triple bottom. Now, usually, if the triple top and triple bottom usually happen at the end of a trend line. Yes, maybe when there's got to be a major reversal on at the end of a trend line. Maybe an uptrend is about to start, or a downtrend is about to start from an uptrend. That is when you see something like the triple top and triple bottom. Now, this is how you define the triple top and triple bottom. Yeah, this is the triple bottom. You want to see something like this, something like this, something like this. Then you want to look for a break at the neckline. Then this is where you put in your trade. That is for a triple bottom. So usually this happens at the end of, maybe when there's about to be a major reversal in a trend line. That is when you see something like this. It doesn't occur anyhow. Then the triple top, you want to see something like this. This is the triple top. Yeah, okay. Now, why this is different from the double top and double bottom is because on a double top, we only have one neckline, while on the triple top, we have two necklines, which is here. Now, you want to wait for the retest here before you put in a trade. So you want to target like 1 to 2 side, 1 to 2 reward ratio. That is what you want to do from here, and I can guarantee you is a catch. Now, let me show you a perfect example of where you can locate this kind of pattern. Now let's locate a trend line. I want to write whatever I did on this chart. Okay. Now, okay. Hold on. I'm trying to get a perfect example for this. Okay. Okay, I think this is one. Let's check. Now, like I mentioned earlier, I said the line chart will filter out noise in the market. Now, as you can see, on the line chart, these patterns are more visible. They are more visible. Can you hear me? If you can hear me, indicate. Just type 1 on your screen, please. If you can hear me, just indicate. Okay. All right. I'm trying to look for a perfect example. Like I said, you have to. Okay, this is an example. Here, here, and here. Now, if you notice, this was an uptrend. Yes, it's an uptrend. So this is what we call trend line. You guys should be familiar with trend line right now. Right now. Yeah. You guys should be familiar with trend line, right? Yeah. So this is a trend line. As you can see, when the moment this trend line broke out, the pattern formed there, and there's a continuation. So like this kind of pattern is more of a continuation pattern. Yes. So like this is more like a triple bottom, because like I said, the bottom is more of a bullish kind of pattern. Now we can see this is the second, the third, then went up. There's a retest on the neckline, which is there because let me take you to the line chart. Oh boy. Okay, let's try and locate it. Now, this is a very perfect example of what I'm talking about. This is a triple bottom. It doesn't look like it, but for you to filter this out, you can depend on your line chart. It will help you to do that. This is a triple bottom. Now, as you can see, look at this. This is, I think, the first bottom, second bottom, yeah, the third, and this, and the breakout, and all the way up. So if you put in for a trade from here, I can guarantee you success from here to here. So you want to pay attention to the triple top and the triple bottom at the end or beginning of when a trend line is about to start. But you want to pay attention the moment a trend line breaks out. That is when you're looking for a reversal pattern or a continuation pattern, like I said earlier. So this is a perfect example of the triple bottom right here. This is a retest here, and it went all the way up. So even though you put in like 1 to 3 reward ratio, because what we call here the buffer zone, right here, this zone right here, is more of consolidation. But in between the consolidation, it formed a pattern. So if you are trading, you don't want to trade in this zone, because anything you do here, you can lose a lot of money, because the market is not really going up, it's not coming down, it's just moving in the same direction. But in between it, it's trying to make forming a pattern which you have to, you have to take seriously. You have to pay attention to know the next move of the market. Now you can see it went all the way up, it didn't stop, all the way up until it got here. Now this is a very major supply zone. You still get to that. You want to pay attention to the demand and the supply zones. And the demand zone and the supply zone are where bulls and bears are basically. So if you can be able to locate where your supply and demand zone are in the forex market, that is where you can keep your money safe. That's like one of the major places your money can be safe. So if you are banking on them, let's assume on this zone. Okay, let me not get into that, but let me just say, let's assume on this zone, you put in for a sell trade. That means in this particular app, if you notice, price was going in circle. It wasn't really, it's going in wave rather. The price is going in wave. It could not break this point. That means there are strong forces here. So you want to be able to identify this zone for you to have a good profitable strategy. There's not really one strategy that is promising forever. That is one thing you have to know about the forex market or the crypto market. It evolves. So you want to pay attention. That is how you know what is going on. Because if you're trading a double bottom today, tomorrow you see a double bottom, you trade it, it can make you lose trade. You'll be like, oh, I didn't do it right. What happened? You start trading strategies. No, because all these patterns, aside from the sharp pattern, there are some other major strategies that apply to the crypto or the forex market. A lot more that makes work easy. For example, we have the Quasimodo principle. Like some professional trader doesn't use this head and shoulder pattern, because you see head and shoulder pattern majorly when there's about to be a reversal on a trend line. So without a professional trader doing that, you can actually spot out reversal. We call it Quasimodo. So all these things are something you have to get used to as time goes on, but you can't, at the same time, you cannot do without these sharp patterns. So number 3, I'm going to be talking about the wedge. We have what we call the wedge. I think I would like to share my screen on that. If I can show you what the wedge is all about. Hold on. Can someone help me out on how to share my screen? Okay, I've seen it. All right, so okay. Hold on, please give me a minute. Okay. The sharp pattern. Okay. Can you all see my screen, please? Can you see?
Yeah, I can see it.
Okay. This is what the wedge looks like. I think you guys need to save this. Can you see it? This is the wedge. This is what the
Opening.
wedge. Yeah, I've seen it. Can you see it?
It's still opening. It doesn't open completely yet.
Okay.
Uh,
Okay. Can you see it, please? Please, can see, let me know.
It's not open yet.
Okay, maybe I should just draw it out. Okay. We're back to my chart. Can you see my chart, please?
Nope.
Oh, okay. All right. What about now? Can you see my chart?
No. Yes.
Okay. I think I'll just draw the wedge out. This is what the wedge looks like. You know, these are very rare patterns. Don't see them anyhow. You know, and you have to pay attention to see them. But I would have loved to, you know, show you on the screen here. Okay, hold on. Okay. So the wedge is a little bit complicated, which I think I will drop some pictures so that we can know how this thing works. So I want to see something like this. When you're looking at the wedge, you see a move to the downside, then something like this, move to the upside, something like this, something like this, something like this, something like this, something like this. Then you want to see a break, something like this. Okay, and something like this. Now, this will make sense. Now I'm coming. I'll draw it very well. So you want to have something like this. Wedge. This is what the wedge looks like. Something like this. Yeah, it's not perfect, but I will drop some pictures so you guys can know how it works. So if you can see, this is not really straight. It should be more bent though. It should be more bent a bit. Let me adjust it. Okay. Perfect. So this is what a wedge looks like. So I'm very sure that most people have not heard about this because we are all used to the normal top and the bottom. But this happens when you want to pay attention to this pattern in between trend lines. That is when you see them. So that's how you know if it's going to be a trend continuation or a trend reversal. So for example, if you're trading and maybe you are in between a trend line, you're trying to monitor what's going on a trend line. And all of a sudden you see a reversal, you'll be like, what's going on? Maybe it was a downtrend, you start seeing an uptrend. You are not paying attention, you know, that is why you don't know. So whenever you see a pattern like this, after a correction move, you see something like this in consolidation, you become in a consolidation pattern. Now, you now see a breakout. You don't take trade until you enter here on the wedge. This is where you take your trade and you want to choose like, maybe take your profit at maybe 1 or 2 reward ratio. Yeah. So this is what a wedge looks like. So all these things, if you want to really spot them, you have to get used to the line charts. Yes. Like I said, the line chart will filter almost all the noise in the market. Yes. Like I see, this pattern are very, most people who understand what's going on. That's why I said you have to know, you have to practice often for you to get to know all these things. So at every point or two in a trend line, there's a chart pattern for me. Like for A, let's assume, look at this. I think this is an ascending triangle. Now, you get it. Like you can see, this is a very perfect example of a reversal pattern. As you can see, normally I said you take your trades here. Now you can see this is a little bit different. A little bit different here. Now, normally, price is supposed to come here, we test and start going down. But if you are paying attention, we call this the ascending triangle. Yes, this ascending triangle, because this is a diversion kind of pattern. It's a diversion kind of pattern because a lot of people will have taken a sell trade from here. That is why I said you want to get acquainted with this pattern. So as you can see, it came all the way and start shooting up. Why? Because it's a continuation pattern. It doesn't matter how it looks. Necessarily, you don't have to say something like, oh, maybe this is a pattern. You want to say something like this, there's something like this, or you feel like, oh, it should go up. No, you should wait for it to form. That is why before you take any move in the market, you have to wait for the full formation, because that is how you get the full details of what you're doing. Because if you don't wait for this, you end up losing money. Yeah, the market is very volatile, so you want to be very, very careful what you do. So that's what the edge looks like. The edge. Then I will share pictures after this, so we can have them and see it for ourselves and practice. So maybe when you're seeing some of these patterns, you'll be like, oh, let me check, and you know how to go about it. So, and thirdly, we're going to be talking about, we have the rising wedge and the falling wedge. I will share these pictures after this. So for every reversal or bullish pattern, there's always a reversal or a continuation, or a bearish or a bullish rather. There's always it. So if you see like an ascending triangle, we have descending triangle, we have the pennant. That's what we call the pennant. Yeah. So let me just list out all these patterns on the screen. Okay. So we can just touch them. Okay. You can just take your time to do other research. Now, this is the VASA patterns. VASA. These are the reversal pattern. We have the head and shoulder. It can be bull and bear. We have the double top and bottom. We have the triple top and bottom. Now let me show you an example of the triple top and bottom. You want to see something like this in an M shape. Now you want to be conscious of the head right here. Now, unlike when we're mentioning sorry, can that okay. Now when we're mentioning the head and shoulder, if you notice, the double top and double bottom, there are only two edges. For the triple top, we have triple edges. They wait for the break of the neckline, then they retest. That's when you take your long trade. Yeah. So you want to take your trade here. The same rule applies to this. Yeah. So this is your ideal stop loss. You can put it somewhere around here, or put it here to be safe. You can just put it at the top of the head, but you can just maybe somewhere around there, though. Yeah, or here, depend on you. But you want to keep your capital away from the market, because market cannot just be trending down. It moves in waves. So this market can be going down, all of a sudden that's something like this. Keep going like this and all the way. So it can happen. You don't even know what can happen in the market, but to keep your money safe, you want to put your stop loss above the edge, somewhere around here. Because aside from getting signals one thing you have to get familiar with is your risk management. Because if your risk management is not strong, you end up predicting a trade, it will come and you will lose money. Yes, it can happen. So that is why you want to pay attention to what you're doing before you enter any trade. Now we have the bullish expanding triangle. Hold on. Now, can you see this? Can you see my screen? Hello? Yeah.
Yes.
Okay, can you see this?
Yes,
Can you see this? Now, this is
Well,
yeah.
we are seeing
This,
pictures.
yes, this is what we call the bullish ascending triangles. So I feel like this will be much self-explanatory. This is the bullish ascending triangle. Like the one I showed. Okay, this one is a little bit different.
It's
Now,
not opening. The picture is not opening, no.
it's not open. Oh, okay. Maybe I should just. Okay, hold on. Okay, can you see my chat?
Yes.
Okay, I will share those pictures after the meeting. So
No problem.
you can check
Just
it. You can
just
check
send
it
them to
and
me. I will just
yeah. Okay.
share with them.
We have the bullish expanding triangle. Now this is an example of bullish expanding triangle. Hold on.
Having something different.
Okay.
And
The
I
bullish
noticed
expanding triangle is a little bit different from the pattern, the other pattern you've seen. And it's a little bit confusing. So, like I said, you want to pay attention to these things. Now, this is what the bullish ascending triangle look like. Something like this. When is something like this? Move to the downside. Something like this. Something like this. Something like this. Sorry, my chart is off. Okay. Something like this. Something like this. Then up, up, up. When you have the picture, you get more clear view of these things. You know, the aim is not to draw them perfect, but to know what is going on in the market. So I want to have something like this. Please don't mind me. I'll use the trend line to correct them. Okay. Okay. Then you want to have something like this. This a straight line. Or should I just redraw? Let me just redraw. There's a little bit rough. Okay. Breakout. Okay, I think it's a perfect example. Okay. Now, okay, this is what the bullish expanding triangle, right? This is what it looks like. Hope you guys are jotting something because all these things you have to know them even without looking at books, because you have to trade every day and you can't at the point you can't afford checking the internet for all these things every time because they will not come like this. I can guarantee you. Sometimes it can come clean, sometimes it can come shady. But what you want to do is to know what is going on and understand it. The interpretation is all that matters. So you want to see a pattern form like this, maybe after an impulse move to the down, you see something like this. You see a pattern like this form. Then all of a sudden you see a breakout, a retest. This is where you always take your trade at the retest. Don't forget that, please, because this can be a force right here. It can be a force. You know, it can lead you to mistrade. So what you want to do is pay attention to this point. So anything that makes price break this point to the downside, it is invalid. Don't forget that. It is invalid. So you want to wait for a retest at this point and you start seeing rejection. You want to see rejection candle, the indecision candle, like a doji. You don't want to see something like indecision, like a rejection on this end. And when I mean rejection, you want to do something like this. You know, weak rejecting that particular zone is going to over here. That is when you take a long trade. And your ideal stop loss is somewhere around here. Your Excel, put it here. Yeah, this is where your stop loss will be. And this is your entry. This is your entry. So I don't want to waste much of our time because there are a lot of this pattern. So I wish I could just show you some pictures. I wish I could show you some pictures, but we can have that after the class. Then secondly, we're going to be talking about the continuation pattern. These are the reversal pattern, either to the upside or downside. Then we want to see a continuation pattern. Now we're talking about the continuation pattern. We're talking about the bullish triangle, bearish triangle, the pennant, and etc. Now this is what I'm talking about. I'll just put them on the screen so you can just jot from wherever you are. Okay. These are the continuation pattern we have. Now you can know that the price chart is the chart pattern is very, very well. So it's more than the double head and the double bottom, the head and shoulder. This thing there are a lot of things going on in the market. So, but as time goes on, you may not pay much attention to this thing. There will be shortcuts, but for now, you need to master them and practice. And most importantly, you must know how to figure this thing out, like point them out in the market, because they will not come the way it shows. They won't look as sweet as this right now. So this, we have the bullish rectangle, we have the bearish rectangle, we have the bullish flag, we have the bearish flag, we have the bullish pennant, we have the bearish pennant, we have the bullish symmetrical triangle, and we have the bearish symmetrical triangle, and we have the bullish ascending triangle. The same thing with bullish descending triangle. So all this reversal pattern, maybe okay, these are your trend line forms. Let's see. This equals correction. Equals correction equals then all of a sudden you see something like this. Maybe they break to the upside, the trend line was invalid, then you start seeing something like this, to this side, to this side, to this side, and see around that, then to this side. Okay. Now, the perfect example of the triple top and the triple bottom. Now, as you can see, there's a trend line coming this way, the trend line, and all of a sudden there's a break in the trend line. They start seeing the pattern form like this. So you want to know that this is a reversal pattern. Like I said, the triple top is a reversal pattern. So you want to see a reversal from here. What you want to wait for is a retest on the neckline and zoom the up. Now that means the market changed from a downtrend to an uptrend. So that is when you see the reversal pattern. When we're talking about the continuation pattern, the only difference is that you can be in a downtrend. And okay, let me just tell you one secret about trend line. For you to know a valid trend line, you need a two valid points to know a valid trend line. For example, let's use this as an example. Now, this is a downtrend, obviously. from here to here. Now you want to go to your line chart. That's how you figure out your hold on. Okay, this is a line chart. This is a downtrend. You want to draw your trend line. Now, as you can see, let's assume this was the first point. This is how you get a valid trend line. Now, the moment you notice there was a break in this trend line, it becomes invalid. You want to move it to the next available touch, which is the swing level. We call this the swing level. Now, if you notice, now this completes this downtrend right here. Now, if you notice, you want to know a trend line after the first touch, second touch, and you want to pay attention to what is going to happen on the third touch. So it's very important. As you can see, on the third touch here, there was a breakout from this trend line. This trend line is valid because it has two valid points, two major swing levels. Notice from this point, price pushed down all the way here, but came back up trying to go up. But at this particular point, that means there's a moving average here. Because something moving average, like it determines your trend. So at this particular point, price couldn't get price past here. Let's go back to the price chart. Okay, price couldn't get past here. You can see rejection candles here, and all of a sudden it came all the way down to this point. Now, if you notice, there was a breakout on this point. There's a breakout. Now, I want to tell you what happened here. You know, it's not every point in the market when you see a direct sharp pattern and start going down. For example, right here, there's a consolidation because when price goes up, it will surely come down, and when it goes down, it will surely come up. So, but at a point after a long impulse or correction move, price will have to recover. So you can know this as maybe your supply and demand zone. Right here. So let's put this here. Yeah. Now, after this downtrend, as a trader, when you see a downtrend, you only want to look for hold on, guys. All right. So on this particular zone, it's not every time you apply this pattern because it will even come like it is coming. But at every corner in this place, you can see those patterns forming. But you want to pay attention to what happened after this zone, because at this point there's a downtrend. If you sold from here to here, you make profits. From here to here, you make profit. So at times, over trading can kill your account. If you are waiting to trade everything that moves in the market, so you have to know when to stop, when to pause, when to go into trade, and when to trade. Now, from here, obviously, I'll show you a secret tonight. This is consolidation. Price was moving in a direction. This is where people lose more money because if you are buying, it can sell. If you are selling, it can buy. So at this point, there's not really going on there because it is consolidating. So you want to pay attention to what happened after the zone. Now, price doesn't just can you guys hear me? So price doesn't just respect a line, it respects zones. So when you are forming your pattern, you want to pay attention to the zones. You want to pay attention to the zones. So now, obviously, there's a breakout from this point. This is the retest. So obviously, this market is coming down. You can in other classes, I will teach you how to actually get where price is going to without using Fibonacci or any indicator to get the price action. So majorly, what I'm trying to say is that from here, this is a trend. This is swing level.
Okay, I think
What is that now?
I think his network is bad. So it's already, we're going to have a part 2 of this class. Yes, I noticed that some of you have a bit of challenge because the what he's teaching is actually basic, but it still seems a bit advanced for the most of us. So we're gonna have a repeat of this class, and
Hey, can you see me now? So I'm back. I have a
yeah,
little bit of yeah.
okay. Mr. Solomon, please. I think
Okay, I can hear you.
okay. I think we're gonna have a part 2 of this class because
Okay.
some of them have a challenge with following because this is almost like this is basic, I get it, but then it's still high
Correct.
for them. Like some of the tools
Yes.
you're using, like they need to know where you are picking them from on the
No,
chart.
that is not right now. We don't have to. We are not really going into the chart right now. I'm just trying to explain the fundamentals of what it looks like. You know, all this we get familiar with it as time goes on. But for now, just go to tradingview.com, create an account for everybody here because this is raw price action. It's different from using indicator to check. Oh, you can apply indicators to like right now. I have my RSI here as my just to check for the oversold and overbought in the market. All these things are not really something that is magical. You have to practice. So go to your you guys can go to your trading views, set an account, and you can these tools are very much available. The more you practice, the more you know how it works. So the aim is not to go to the charts right now, just to tell you what the fundamentals are. So that is why I would like to share the pictures with you guys after this. So you can see those pictures, then apply it to whatever you're doing on the stock. So I will share the pictures to you. So as time goes on, we get over to using the charts to practice and stuff like that. So I'm just showing you how it works. How it works. So these are just normal price pattern. We still have a continuation though, but I think I'll just do a small write-up concerning the continuation pattern so that we can read it in a few times and get used to and start practicing. That's the most important thing. That is the most important thing. So I will drop this some notes after this class. So you guys should just take time, study it, go to your chat, try to know what is going on. Even for now, you can just back test and don't trade. I will advise that. Just back test and don't trade. You can just check the chart, what is going on here, what is going on there, and see what happened after that particular move. You can start to come like this, oh, what is going to happen here? You check and what happened. Just start analyzing because whatever you learn here today is not a trader will only teach you how to trade, but they won't trade for you. So you want to get very, very acquainted with all these things so that you won't make mistakes. So about the Fibonacci, that is why I didn't talk about the Fibonacci yet because if you don't understand the chart pattern, you can't use the Fibonacci to trade. So okay, Miss Victoria, are you there?
Yes.
Okay, so we can stop here now. Then as time goes on, maybe we can do more and know how this whole thing works. Yeah.
Okay. We're supposed to have the chart patterns and the Fibonacci, but then this chart pattern is enough for one day.
Yes.
You handled up to 9 different chart patterns. So like I said, I was recording the video. Every one of us that participated in the class will get the link to the video to watch it again. Like he said, one thing about this thing is it's with practice you get better. So going back to watch it and then maybe trying it out with a thing or two, like maybe just a little font, or I don't know if you can demonstrate with this. But then it's in the practice, you know how to do something in the practice. You don't get better with technicals unless you actually put a lot of hours. I'm talking about a lot of hours into it. So this is already an hour tutorials. We'll fix another day and I will tell us when it will be. I'll share the link with us. And then I'll send this video individually to us so that we can watch it again, get our questions ready. So by the next class, you'll be ready with your questions, and then we'll take it a step further from there. But then if you want I think I have a couple of videos too on my YouTube channel where by the candles and all were explained, and one or two things were also explained. So you can also check those ones out and watch them. But like I said, and like he said too, Mr. Solomon said, these things they come to you by practice and all that. So what you should do for yourself is, this video will be up in less than 30 minutes. So as soon as it's up, I'll share the link around. Then you bring your phone, log into TradingView. If you have a laptop, log into TradingView and try to see all those things he has been pointing out on your own side. If you have any hiccup, remember this class is free. This class is free, and there's no my YouTube channel is Valucop Global. Valucop, just Valucop, VALUCOP. That's my YouTube channel. And then my social media handles is it's Valucop. Just type Valucop, you'll find me, you'll find the Facebook, Twitter, Instagram, YouTube, and all that. Okay. So you can for the rest of you can send me a message on WhatsApp 070. Let me type my number in chat box. If you are here but you're not you don't have my WhatsApp contact, I'll type my number now. So send me a message and send a message to this number now in the chat box so that we all can. I'll add you to my broadcast list, and I'll send you link to the video and all further updates, because the class will not end here. We need to learn this stuff, and this class is free for now. So let's enjoy it while it lasts and all that. So if you have questions to prepare for the next class, thank you very much. I believe one way to get the best out of this is to go back and rewatch this video as soon as you get it, and then try to practice on your phone. The app is available on your phone. The website is available on your phone. Just log in and try it all out. So thank you very much. I would like to get your feedback about. Okay, let me type the name. Is it my name or the name of my brand? That's the name to my YouTube channel and my brand too. It's Valucop. So you type it on YouTube, you'll see the YouTube channel and all. And then I would like to hear from us what. So because we would like to make this better for you. So what questions you have, just get back to me. I would like to hear from you. So thank you very much for your time this evening. I believe that we learned one or two things, at least the names of the different bearish, bullish patterns, so that small, we'll see them and recognize them and start using them. So thank you very much and good night. So thank you, Mr. Solomon.
Good night.
Good night. Thank you, Mr. Solomon. Really was an interesting one. Thank you.
Good night. Thank you. Good night.